Welcome to the Money Market Show. I'm your host, Paula Joy, and it's a pleasure to have with me today Wasah Malik. And Wasah is originally from Toronto, okay, Canada, beautiful city.
Canada, originally.
Yes, and now he lives on the East Coast, right? So a lot of Canadians moved to the East Coast, but we don't want to talk about it. But let's talk about you, Wasah. Thank you so much for coming on the show today. Yesterday, say you met, I get a lot of emails from different people, and I just, scan the email and say, okay, do I need to talk to this person? And so I went and saw what you provide, and I thought, man, my listeners, my audience need to know about what you provide and stuff like that. So that's why I invited you. And I'm so glad that you were able to take this, invite and just jump on the call. You actually came on the call before myself because you're on the East Coast and I'm on the West Coast. Yeah. But tell me about you, sir.
Well, hello, Paul. Good morning. I'm so grateful to you for inviting me on your podcast today. I appreciate it. Yes, it is true. I am on the East Coast, but I didn't show up 5 minutes earlier because I'm on the East Coast. I showed up earlier because that's who I am. I show up early to my meetings. I'm an early comer to meetings. I don't come on time. I come early. That's who I am. That being said, I'm originally from Toronto, Canada. That's where I started my lending business. I'm a private lender. I lend towards real estate properties, investment properties, and I do short-term business loans as well. I lend towards that too.
So you're going to talk about all of that, short-term business loans. Okay.
Yeah. So I initially started from Toronto, Canada. That's where I still have an office there. We still lend quite a bit of money there. We've done almost $50 million in Ontario at the current moment. That's how much is on my books currently. And then I went through a phase where I was looking to expand, but I couldn't figure out which market in Canada to get into. I had different parts, like I could go to Vancouver on the total west coast of Canada, start an operation there. But I just felt there are more opportunities in the US. My parents live in the US. My parents have been out in the US for I don't know how long. And I decided to open my second office in the US for the US market. We've got about $100 million fund that we're lending from. We do mortgages, as I said. We do short-term business loans, as I said. And we're lending all over the U.S. We're just here to close your mortgage deals.
Okay.
So how can we make your life easier?
Cool. So let's start
more on.
Okay, great. Okay, let's start with the mortgage, the real estate part. So when you're lending, you say you're a private money lender. So when you're lending, what are you lending on? Okay, you're lending on residential, commercial. What are you lending on? Industrial. What are you lending on?
All of the above. So we've got a few programs here. We're not doing owner-occupied properties. We're only doing non-owner occupied, so they'll be your investment properties. We've got a few programs, a couple of programs for mortgages. So the first program is we are experts at your funding for fix and flip projects.
Okay.
Banks are not going to lend on that stuff. So you're always going to find hard money, private money for these projects. That's where we come in. Now, I'm trying to be more aggressive than all our lender competitors because we want to be the best lender in town. We want to be the best one all over the US, and we want to close $100 million worth of deals and grow from there. So fix and flip projects we're doing, we offer all the way up to 90% loan to value on your purchase price, 100% on your rehab cost. If you've got zero experience as a flipper, I know majority of lenders will not lend to you. We'll still lend to you. If you've got no experience, that's okay. Whereas if somebody is very well experienced, let's say a flipper's done 30 projects in 3 years, hey, we'll give you 100% on the purchase price. They won't even have to put any down. We'll give you full rehab costs. So we'll be very aggressive. Then we've got a set. Sorry, do you have any questions? I feel.
Continue. I'm gonna jot down questions, right? So I think what intrigued me was your 100% financing, and 100% financing on the purchase and 100% financing on the rehab. I know people will do 90% of the purchase and 100% of the rehab, but you do 100% of the purchase, 100% of the rehab, so long as that person can demonstrate like experience of 30 properties in the last 3 years. So that's a full-time flipper.
Yeah. So the whole idea is the more experience you have, if this is your full-time work and you do a lot of it, it pretty much means that you complete 10 projects a year. That means you're probably doing this on a full-time basis. There's nothing else you do in terms, well, you could have another investment, but this is your full-time business. So you have the right experience and we'll give you full money. We'll accept it.
Okay, cool. I have a question on that because some lenders, right, they would basically give you the 90% of the purchase and 100% of the rehab, like Temple View. If you flip 5 properties, like your platinum, right? They'll give you the advance, right? The rehab advance. How about you guys? Would you give rehab advance? Because some flippers, what they do is basically they might be flipping a lot of properties, but they don't have the cash in the bank, and so they will need some upfront money, right? Because the thing is that most lenders, what they'll do is you do the work, and then they come and inspect, and they give you the draw and stuff like that.
And you know why that is, Paul? Well, maybe we can talk about that for the viewers. Like, why do lenders actually do that? Right. It's for the lender's safety. The reason is, let's say the property, when it's not complete, it'll be worth, for example, $100,000.
Yes.
You're going to put in $30,000 worth of rentals. Your final value is going to come out to ERV is going to be $150,000, right? But right now the property is worth $100,000. Let's say we give somebody 100% financing on the purchase price, for example, or even say 90 LTV, right? So they've borrowed $90,000 on a $100,000 property. If I give them $30,000 up front on that property that's worth $100,000, I've lent $120,000 on that property, right? Yes. When the property is worth $100,000, what if the flipper takes the money and runs away? Now, when they run away, yes, there's a whole process for foreclosures, all of that. But hey, I've still lent $120,000 on a $100,000 property. Good luck trying to recover that. You can't. Right. So that's why there's that thing that, hey, you complete that phase first. We'll do the site inspection. If it's complete, yes, we'll be happy to release that phase of funding. And it's just to protect. Otherwise, there will be so much fraud happening. So it's just to mitigate risks.
What if you vet out?
However, I will suggest something else. I also do short-term financing for business loans. So if there are accounts receivables, I could look at that scenario at that point too. So first phase of funding could be the private mortgage funding that you're getting to flip the property. But if you're looking for upfront money, we could do, like, if you have accounts receivables or whatever you may have, I could lend short-term funds, 30-day funds, 60-day funds based on those invoices. So a flipper, just to help you understand how to structure this, a flipper could have invoices from their trades that they've hired. So if they've got invoices, contracts, if the company's got to be legit too, the trade companies, right? We'll register a lien on that invoice. So we collect the invoice payment ourselves. Whatever the split is, we'll give it back to the flipper. So it's short-term business loan lending. That's what it is. So we could package rehab funding like that too.
Right. Okay, that's good. Good to know. Yeah. So basically, it's some kind of gap funding that you're trying to do for them. Using, maybe you got credit. Some people use their credit, right? And say, okay, fine, let me leverage your credit. So long as your credit is 680 plus, I can give you a short-term business loan.
So we'll talk more about business loans. I can't even do that stuff. It doesn't have to be good credit. If they've got Chapter 16 filing, bankruptcy stuff, bad credit, I can still do short-term lending.
Okay.
If the risk is higher, the fees would be higher, right?
Okay. Let's come to that. Okay. So what's the minimum price when it comes to lending on real estate flips?
So my bare minimum loan is $100,000. That's where I start from. I know some folks do $75,000, $80,000, but it's just the deal size is so small. Even $100,000 is very small for us, but that's our bare minimum. The maximum I can fundraise is $10 million on one transaction. We'll lend. We lend on residential properties, commercial properties. We do construction loans as well. We can help you with fix and flips as well.
Okay.
So right now we've spoken in depth about our fix and flip program. I'd also like to talk to you about our rental programs.
Yes, I was going to ask you that. That's my next in line here. Rental, buy and hold. What are your criteria there?
So we are doing 30-year amortizations on our rental programs. We have a minimum debt service ratio of 1.1 times that we're targeting.
Okay.
Our rate sheet right now is starting from, and keep in mind, rates have been going up. Yeah. We were able to offer around 4.79 back in the days, but the last few months have just been brutal. Rates are going up. So now our benchmark is from 6.5%. And we'll give you buy down options as well.
Okay. Buy down to how much?
So let's say we start you off, we'll give a few scenarios. So let's say we start off with a quotation of 6.5% with, I don't know, I'll throw a number, 5-point fee, for example, right? Yes. There will be another scenario where we'll say, okay, if you want 7.5%, we'll do 4% fee. 8.5%, 3%, or whatever it may be. I'm just giving a basic, just
Right.
overall. We'll package it that way.
So
But
how
the
do
benchmark starts from about around 6.5%.
is there a floor rate? Is there a floor rate? Is there a floor rate?
6.5%.
Okay,
6.5.
okay, cool. Right. Now, maybe I have some transactions for you. Okay, actually, I might have some transactions for you right now. Okay, so that I'm working on. Some clients come to me, and I want somebody to move fast, right? Move fast. Okay, so
Excellent. That guy's me. So Paul, one thing that happened with me was when I started out very young, I noticed I would go into mortgage brokers' offices looking for business. And what I noticed was that folks provide such terrible customer service sometimes. And I don't understand. If you're self-employed, this is your business. You're making your money because a client came to you from all the competition. They didn't go to them, they came to you. You've got to respect them more. You've got to do a better job for them. So when I saw that bad customer service, I noticed that, hey, when I start my work, I want to make sure that I provide a positive customer service, excellent customer service. So when somebody comes into my office, and by the time they leave, I want them to feel like they're kings and queens.
Yes.
That's the idea. You have to provide a good customer service if it's your business. I don't see it any other way. So we focus on that. When you're going to submit a deal, within 1 to 2 hours, you're going to have my response.
Okay.
You're going to hear from me. And by odd chance, we're human beings. Sometimes we're extra occupied with work. If I'm not able to get back to you in the hour, at least I'll have the courtesy to let you know, I recognize you've submitted a deal. Give me a couple of extra hours, just catching up on my tasks. Just send a quick test, right? Tell somebody that I respect your time in business, just a little occupied, I'll be right with you, right? It's simple, it takes 10 seconds of your time. So we focus on customer service.
Yeah, that's good.
Person. And like our program is as such now that in terms of documentations, we don't even ask for much. We're not asking for your DNA. We're not asking for your blood work. You can keep it. I don't know. I don't want to know what your vaccination status is. We're not asking for any of those crazy things. All we're asking for are very simple documents. So your purchase contract, which is basic. Your listing copy, if one exists. Third thing would be just show me a statement that you can close the deal, that you have the down payment funds. Your articles of incorporation, your corporate entity documents for your purchase. That's it. We'll order the appraisal, but that's it. I'm not asking for income documents. I'm not asking for any of that stuff.
Okay, cool. That's great. So let me give you a scenario. Okay, this person is cash flowing. His cash flow is $9,000 a month, right? And
so the rental income is $9,000 a month.
Well, rental income $9,000 a month. Okay, he owes $640. Okay, the thing is that this is a short-term loan, and we want to pay that off, the $640 off, right? And we believe the value is about 8 something. That place came in short. They've used the market approach because we try to use a non-QM lender. Okay. So they use the market approach. Okay, the income approach came in at 780, but I looked at the comps myself, and the comps are going for about between 780 and 888. There's another comp for that. Okay, and the income is there. Okay, the income is there, but we're having a hard time, having the lender, work with the income approach, right? Which is basically the guys get 9,000, right? We just need to pay off the 650, right? 640 plus our cost.
Yeah. So Paul, we're also on the show, so it's good because we get these questions a lot when somebody submits a deal. So hey, it's good we can clear up the air about it. So what happens is when an appraiser sends us a report, there will be a few approaches on it. One will be a direct market approach. One would be an income approach, right?
Yes.
The reason why income approach is so important is for a lender, let's say the borrower defaults and we go into foreclosure, we pick up the property. Now the worry is you may be collecting $9,000 rental income right now, but that's higher than the market value. What we can only assess on is what will the market pay us? You as a landlord might be lucky that you have somebody paying you more, but in general, that's not what happens. In general, it's whatever the market rent is, that's what people will pay. So that's why we have to look at approach on it. Whatever the lower value is, we'll have to look at that and then based on that.
Yeah, but what I'm saying is it's not when he does a market approach, the market approach is like looking at what's sold in the area. Not so much what is, you should be looking at what is a market rent. right? The market rent puts its value at 780. But what's sold in the area,
Yeah.
okay, puts it at 680. Right?
Absolutely.
In that case, how are you going to, what are you going to take? The market rent? Because some lenders, what they'll do, okay, hey, I have no property, right? They say, oh, what's the real rent? Okay, we just picked up this property from a landlord who bought this property in 2012, okay? And he bought it for 100 and something thousand. The tenants have been paying $2,300 for the past 10 years. So the landlord doesn't care because he only bought and
they've got a good tenant and they're happy.
Yeah, and because now the value went up and up and up. So the market back the sale, okay, when you if you to sell the property, which we bought from him, okay, it's 515.
But here's where the discrepancy is, Paul. The market, the problem is that they haven't stabilized their rents according to the market.
Yes,
that's what it is. The landlord might be okay in doing so because they have the comfort. They know the tenant is good, right? So they don't want to take the risk of bringing in a tenant who pays them higher but gives them so much trouble, right?
Yes.
So from the landlord's point of view, that makes sense. But from a lender's point of view, it doesn't make sense. I'll tell you why. So right? Because like let's say bad things can happen to good people, and that's what we as lenders have to account for, right? If something bad happens to you, you end up losing the property, for example, and we go into foreclosure. Let's say whoever's going to buy the property, they're also going to look at the rental income, their lender at least, when they pick up the property, right? And when the rental income being collected is less for whatever your instability reasons are, it doesn't matter. But the rental income is not enough to cover the debt service ratio. And that's where the problem is. If your property is not covering your debt, what you going to do?
So in that case, are you going to go for market rent or are you going to go for actual rent?
Market rent.
Exactly.
Or market rent or the lower. Depends what the scenario is.
So you're taking the lower
market rent. It's usually the market rent or the lower of what you're collecting. That's what lenders will do. That's what we do as well. Right. Because let's say, for example, if the market rent comes out to $9,000 and you're only collecting $8,000, that's a problem. That could be a problem for me. If your debt service ratio is not in line, that is. Yes. If your debt service ratio is in line, that's okay, no problem.
Yeah, okay. So
it all depends on that debt service ratio.
So we're on the same page.
And let's say your debt service ratio is not in line for 1.1 times. We don't have to put you into a 30-year rental program yet. We can do a bridge loan for 12 months, right? Your rental income is a lot less than what it should be. Your debt service ratio is not even covering your debt. So we'll do a bridge loan for 12 months, give the borrower the opportunity to stabilize their rental income. So if they need to bring new tenants, whatever they have to do, they have to stabilize the operation, bring it to 1.1 times, and then switch it out into our 30-year rental programs. So we'll help them go from a bad scenario into a positive scenario. We'll help them transition into that. And that's the beauty about our product.
Right. So one last question on that before we move to the next thing. Okay, so the market rent, according to this guy, the appraisal, according to the market rent, the value of the property is not $780,000. Okay, the actual rent on the property is $9,000. If you look at the cap rate, this property is way more than the cap rate in that area. The property is way more than 780, right? Because if you're getting 9,000, even a cap rate at 12%, that property is worth at least $900,000. Okay, granted, he's getting too much for it, but the market rent is what? Is at least $780,000. But the guy, the appraiser, was looking at what? He was looking at the sale value.
Yeah, because an appraisal, that's what an appraisal has to do, right? They can give us information based on what the market is showing. So they can't give me an estimate. Well, it's because that's what we ask for. What is the market charging?
This is an income property.
But that's also part of the underwriting.
Yeah, exactly. But this is an income property that's supposed to, it's 3 units, by the way. Okay, it's an income property. It's an income property as opposed to this is not consumer property, right? So I would have thought that basically, hey, look at it as an income. If anybody were to buy this property, what is the market rate? 7,500, for example, let's say, okay, in any month today. And if you calculate the cap rate in that area, let's say the cap rate is even 6%, 7%. There's the value of that property, okay? But the guy that borrows is actually getting more for it. Anyways, we can talk about this offline. I want to bring that deal to you so you can see, man, if you can close that thing, that'd be great, okay? That'd be really, really great.
Hey, Paul, I want to be your #1 private lender. I want to be your go-to guy.
Cool.
Okay, you got a deal, pick up the phone, let me know.
We're going to talk about some other things.
We'll do it.
Okay, one of the guys, the cousin to this guy.
Yeah, so in terms of timelines, the only thing, like the rest of the docs are very basic. Everybody has it. It's just an click away. Email me the docs, 4 pieces of documents. That's it. The only thing that takes time are the appraisals. Depending on how small or large the property is, that's the only time we have to account for. We did a deal in Florida that was 19 units, so that took about 2 weeks on the appraisal, but it's only the appraisal time we need. Closing is simple, fast. Within 2 days, you can have the funds.
Okay, sounds good. All right, so yeah, we have some other ones that, do you do blanket loans?
Yes, we do.
Okay, cool.
We have to be in first position though, on all the
exactly. So you just take, so if I give you a bunch of properties, okay, it's one borrower, you can just blanket them. See, for example, let me tell you the situation I have right now. This borrower is trying to buy out some business partners from Pennsylvania. He's based here in Sacramento. They have some kind of marijuana thing. They try cannabis, okay, cannabis dispensary. So, so he has properties, and you can actually refinance his property so that he gets money to buy out this business, which is pretty lucrative. Okay, the business is pretty lucrative, and he really wants it, right? So, okay, instead of lending on the cannabis, which I don't know whether you lend on cannabis, it's okay. Instead of lending on cannabis, you lend on the property. He got the money from the properties. He goes and buys the cannabis people and does whatever he wants to do with that, right? So we can talk about that offline as well. So I'm glad you do blanket.
So yeah, we do blanket as well. We just have to be in first position.
Yeah, exactly. Okay, so okay, when you look at ARV after repair value, what's your benchmark?
75 LTV.
75%. Okay, LTV. That's great. Okay, cool. And then you did talk about BKs and foreclosures. You can bail out people.
Yeah, we're not actively looking for those deals, I'll be honest. But if you've got something and the scenario makes sense, I could help out. But it's just we've got to make sure that they can come out of that situation. By they, I mean the borrowers, of course.
Yes.
They just have to demonstrate that they can get out of this bad scenario that they're in, and we're willing to help them get to that from A to B. Then.
Right, exactly. I think that's doable. Okay, because let's say they own the property in this entity's name, and they got into some bad deal, and now you can refinance them out into a long-term loan, okay, right? And they have tenants, right? So why not? Maybe they have students right now, and the students are guaranteed. Okay, that's great. Okay, I think we could do some good deals here because as we're speaking, more deals are coming to my mind. Right, of people that come to me and say, "Hey, Paul,
I like hearing that, Paul."
Right? Sure.
Sending them to me. So we're lenders that are in the market to service deals that banks don't service.
Yes.
Banks will say this is too high risk for us. Those are the deals we want. If you get qualified at the bank, please go to the bank.
Yes.
You don't need to come to our private expensive money. We're here for deals that banks are not servicing. Of course, we have our limits too, our underwriting as well. But hey, we're more aggressive than the banks. That's what we're here for.
So if we are to summarize what you provide, so okay, people are watching this, and after this, I'm going to blast it to people as well, okay, to realtors and stuff, okay? So if a realtor's listening to this, and you just mentioned that, okay, you fund deals that banks don't fund. If you can just summarize in the next 2 minutes, that'd be great.
Okay, well, we're expert private lenders for deals where banks don't want to lend. We lend towards real estate investment properties, so no owner-occupied stuff. We do rental properties, so we'll do 30-year amortization. We can provide that. We do single-family homes, duplexes, triplexes, 4 units. We'll do 5+ multi-units for you. We are very aggressive in our lending, so we'll have lower down payment options for you. The minimum we're looking for is 15% down payment for our rental programs. We've also got an amazing program for fix and flips. We do 90% loan to value on purchase price. if a borrower doesn't have experience in flipping, we will still lend to you. If you've got a lot of experience flipping, we would love to lend to you at 100% purchase price. So essentially, they would be paying 0% down. We're expert lenders at that as well. And I'm also providing short-term business loans for business owners. So they've got to be 2 years in operation, though. We're doing short-term lending. So that would be 30-day lending, 60 days lending, and they will be on your business assets. So business assets would be, we'd love to lend against your accounts receivables, purchase orders, payroll funding. It could be on the equipment as well. What else can I? MCA financing. I'm not the best lender for MCA, but I could do it. MCA is also very, very high risk. So we're not always going to do it, but we can entertain it. We can look at it. For short-term business loans as well, if you've got bad credit, terrible credit, if you've already filed for bankruptcy, we can still do our best to help you out.
Okay, cool. And so for business loans, would you go more beyond 60 days? Would you fund for 6 months or just 60 days?
What I could do is on one invoice, I won't do 6 months. It's not short term for me. Short term would be about 60 days. I don't even prefer 90-day receivables. I want to look at 30 days, 60 days. Yeah, 30 days, 60 days would be my max.
Okay.
What we could do is, like, if somebody's doing repetitive business with their vendor, I could just open a line of credits for, let's say, 2 years.
Yes.
So let's say they issued an invoice, we funded on it. After 60 days, let's say that invoice was closed, everybody was paid, the monies came out, and they've got another invoice from the same vendor because they do repetitive business. They don't have to apply all over again. Well, I'll just open them a line of credit. They just have to tell me, here's a new invoice, Wasah, and I'll just withdraw the funds from the line of credit for them. So we can do neat stuff for business owners. Our product is definitely worth checking out.
So what kind of ideal client is looking for this? The 6 days.
So we have a lot of trucking companies looking for invoice factoring.
Okay.
So trucking companies will have, they usually get paid in 30 to 60 days from their vendors, whomever they're transporting materials for. And that's where we come in. So if you need funding on that invoice, we'll lend on it 80-90 LTV.
Okay. 80-90.
So trucking companies are very good. I've noticed construction lenders are very good because they've got receivables with their trades and where they purchase their products from, even sometimes. People that purchase from them. Payroll funding could be for employment agencies. They have a lot of funding that's just pending. We can lend against that.
Right.
So those would be good clients. Anyone with receivables is a decent client for us.
Right. Okay, cool. That's awesome. So it looks like this is something we can actually do also for people that want to wholesale properties, right?
Yes, I could look at that.
Yeah, because let's say somebody wants a wholesale property, and but they don't have the money themselves, and they tie up this property for, let's say, in California, it's expensive here, right? Let's say the type of property for $800,000 is actually worth $1.2 million. Right, and they can have all these flippers, right? Like a young lady called me yesterday. She wants to get into wholesaling, right? That could be something for her. Okay, she ties up this property, and she doesn't. Maybe she needs $10,000. Okay, the top of the property is for EMD, right? So you can give her that $10,000 or $30,000, and now she has somebody going to buy this property from her for $900,000, and she's going to make $30,000. Right? So your $10,000 is risking nothing because, after your fees, she makes about whatever, you know what I mean? So that could be another avenue, for people that will listen to this, whether they're real estate agents or they're investors, So cool. I think this is one of the many talks we're going to have in the future, Wasah. So thank you so much for coming this morning. Is there anything else you would like to add before we conclude here today?
Yes. Well, thank you for having me. I'd love to be back on again. There are various things we can talk about. Of course, we can talk about the mortgage products. I know everything that whatever questions you have, we can answer that right away. Thank you for having me on.
Okay, I'll bring some deals. I'll bring you some deals this morning.
Some fun. Hey, listen, I've still got about $90 million left in my fund, and we've got to get it out. We've got to lend that money. So I need your help.
Okay. Okay, I'm glad. So we'll go shopping for you, right? And I'll bring you two deals to look at this morning.
All right, I'm here. You know where to find me.
Yeah, maybe a few. I'll bring you a few, that we can look at and see how we can close these ones. Let's start with these ones.
All right, I'm here to help. Whatever y'all need. Thank you for having me today.
Okay, thanks, bro. Okay.
I appreciate it. You take care. Keep up the positive energy. Bye-bye.
Okay, bye-bye. Thanks.